The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And I hope you guys enjoyed the debate last night. I actually fell asleep. That's how exciting it was on a relative scale to what happened in the previous ones. So I'll catch up on it later. Hope you guys had a successful night watching it. And we're taking a look at oil first. This is the November contract. You know, this is kind of what I was hoping for, to see a kind of a fake out reversal here. We're going to reference the dollar on this one too, but getting back down below 51.22, I'm very okay with trading this down to 50 at bare minimum right now. And we're going to take a look at the dollar really quick. Dollar hanging around up there, got a new profile appeared yesterday. Obviously 98.15, some targets you got to be aware of there. It's kind of recent highs at the same time, but again, you know, big time support 97.27. Dollar could pull back there. That would kind of be defaultish bullish for oil in general, but I think oil's got a really, really good chance to come down to sub 50. That's what I'm hoping for. Stops above 51.22 right now. It's a little bit more of a scarier trade based on, you know, kind of just writing on the wall situations, kind of spinning around above profiles. I just don't have a lot of confidence that that's going to stay up there. But a lot of people feel that way, so watch out. Here's the bean trade really quick. You've gotten into that 983 area yesterday, kind of backed off this morning and now lurching forward. Got some resistance here. That POC on the weekly sitting around 986, so got some resistance in this neighborhood, and I'm also expecting this to kind of head south a little bit. But again, got to have a little bit more confirmation than what's going on right now. A daily close below 983 will be awesome to try to really put a stake in the ground on that particular scene. I was reading about this Saudi Arabia just massive bond sale. They've got a $97 billion budget deficit. I mean, how in the world could somebody get in this situation that's been pumping oil out of the ground forever? But I kind of got a hint of that yesterday. My nephew, Georgia Tech graduate, is in Qatar right now, and he's on his way to Nepal, and he's not going to do Everest, but he's going to get up into the 20,000, 21,000 elevation area. I think he's going to visit, you know, base camp at Everest, but he had to kind of travel through Qatar. And he called me yesterday, and he goes, I know you've been everywhere, man, but you got to come here. You got to see this to believe it. So much money, only 300,000 citizens in the country, over 5 million there. He said there's just so many people trying to come there and take advantage of all the money. And I'm sure that was the case for Saudi Arabia forever. But, you know, he said that, you know, this prince has his own airport right next to the airport, his own highway going in from, you know, his own airport, the separate, I mean, just crazy expensive things. He said everything's got gold plating, and I've never been there, but I'm sure it was shocking to him, and he's been a lot of different places already. So it's just amazing how those countries now are raising money, or Saudi Arabia is raising money. He's been in the same situation. But again, you know, there are a couple of friends. Actually, Mustafa, who's been on this show, is in Saudi Arabia, works for the government there. They're really scaling back. I mean, they're cutting all government salaries. I think a third of the nation works for the government there, and cutting back 20% across the board. So doing some belt tightening, but obviously still some lavish situations over there relative to what we think is lavish. The Aussie dollar, a little bit of news out here, but, you know, I always got to pay attention to the levels here. And yesterday we reached some of these heights, 77.03, and we're backing off a little bit here. I still think the 75.87 is big support, but we did reach some targets yesterday. You just always got to pay attention to those. I've been blocking out the short side on this. Still the same situation, but just, you know, now it's got to be a close above 77.03, or, you know, we've got support at 75.87 on the Aussie dollar. The yen's been kind of nerve-wracking around this level here after we closed above 103.50. Joey and I were talking about this yesterday, just sitting right at the weekly unfair high. The more this kind of spins around up here in this area, the more it actually makes me feel extremely good about being long this product. I think Joey's kind of spot on. I think 108, 109, 110 is pretty much in order for this particular cross. Let's take a look at the British pound. Kind of no man's land. We talked about that yesterday. Do have a POC at 123.14 on the British pound USD cross. Big numbers 120.41 and 124.97. Kind of in between there. You know, the short-term trade. And again, these 240s are very powerful. They're in the scanner, 123.25 and 122.03 down below. So that's your short-term numbers. I've given you your intermediates. And again, this is going to, you know, I don't have any direction on this trade right now. Shorting inflection points, shorting resistance areas, and selling breakdowns, I still think is the name of the game on the British pound. But you do have some short-term long opportunities, range trading on some 240s here, 122.03, 123.25. Okay, going back into our futures server here. And we may start switching, we may start talking about more ETFs in the future here. We've got a platform we're going to be putting out and possibly get away from eSignal. So be prepared for that. Here's the 10-year, just, man, 130, 13, 14 up top, 122, 20, 129, 22 down below. I think the 10-year is kind of a wait and see. You know, I think there's not a lot of news coming out until I think this election, getting a little bit closer to the election date, it's gonna probably cause some more volatility. But I don't think the markets are completely complaining about the odds right now. Gold hadn't reached 1278.5, but we're going to talk about that in a minute, and we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the 30-year really quick. This is interesting, hanging out above 164.02. That's kind of the floor there. But the 10-year, it's amazing. I mean, it just continues to astound me how these treasuries hold up. But again, like they're looking for any reason, as we've talked about 1,000 times, any reason at all to be dovish. And when I say they, I mean Yellen and her crew, and especially it's amazing. So I'm always scared to short the treasuries. I've talked about that quite a bit. And, we haven't explored this fair auction in the 30 years. So again, you got a good place to play defense there. 30-year has got some volatility to it. So I'm kind of more partial to trading the 10-year, but some decent opportunities there. I was reading, let's see here. I was, talking about the election again. I was watching some comments in the den. It is truly amazing how it has come down to sound bites, and I totally agree. It's the main issues. That is scary as heck. Somebody not making their stance and claim to fame really on policy issues, and instead of whose personal life is less flamboyant or more flamboyant. I mean, I think both of them are easy targets on so many levels, but the targets should be, if they are about policy issues, and everybody knows that, but that's maybe why I fell asleep last night. Also, I didn't know Brian Williams was back on the air. Did you guys check? I never watched MSNBC, but they kind of dusted him off. I don't know how long how long's he been back in action since he got caught lying about 1,000 times. I didn't know he was back on the air. Natural gas, we're going to hit that. If I can find it here. Here we go. Yeah, where's John Chancellor and David Brinkley? Brett Hume, kind of like him. Here we go. Natural gas. This is the November contract. So we finally busted above 3 2 weeks ago. There's the long-term weekly, but let's just drill down to the next time frame down. So you got support 3.03, 3.08. I know we're a little bit of ways away from there, but that's going to, be long-term support on this right now. Here's the 240 kind of breaking down. That was kind of a buy point if you are looking at that long-term above profiles and trying to find areas to kind of catch a bid here. So starting to cave a little bit farther down below shorter term profiles, but the big kind of collection areas 3.03 to 3.08. I don't trade natural gas personally, so I'm just kind of showing you what I see here. Here's the 60-minute. All these levels are in the scanner. All right, let's head into some stocks that were somewhat in the news. Let's take a look at Morgan Stanley. Here we go. Yeah, I apologize for natural gas. That's a little bit more fundamentally driven a lot of times, and it's kind of a thin market in my opinion. So I try to stay away from it. But I know there's some big points to be made in it. 30.08, that profile appearing below price action on Morgan Stanley kind of put that bullish tone and slant through the whole thing. Here's the daily on MS. And let's see, pre-market, it looks like we got a couple of prints going off here around 33. So edging a little bit higher. Again, had already proven itself to be a strong stock in that sector. So again, at least you were able to block out the short side. And again, had some earnings yesterday. American Express, let's take a look at this one. $65.13. Looks like we're getting a print this morning around there. So launching pretty heavily since yesterday's close, getting back up into actually the middle of the profile up here on the weekly. So what do you do with it this morning if you're walking in looking at American Express? We're way up here, right up 65.10. Let me go back to the weekly here. So we're right up in this area right now. It's not showing it on the chart. That's where we're printing this morning. 66.67 would be a chance to do a short-term trade on the short side there, but I think you really don't have a lot of leverage there. You're going to have support at 62.90 on this stock. AXP, eBay. Looks like we're printing about 29.65 this morning, so we are right down in this area as of right now. And this was a strong stock, but again, you got these earnings coming out. You're taking on some risk, and this is one of those cases where it was a strong stock, kind of spinning around above profiles, earnings coming out, and market's not very happy with it. So getting a tank. You got support at 28.94 on this stock. I actually like trying to pick it up on sale down there. 28.94. We're trading about 29.65 right now. So if we can edge a little bit lower, I think you've got a chance to do a trade and bounce here on eBay. 28.94. That's our weekly unfair lows. Again, that's a kind of a very noisy trade. People adjusting positions. Some funds coming in and having to get out. Halliburton, looks like we're printing 48.95. So this is a stock. Showed some strength lately in the XLE. This kind of like Joey and I were talking about the other day, closing above and going back and retesting. These are really good benchmark inflection points to kind of trade that retrace with the stops in, and let's see if we get a bounce. Definitely got one here this week and yesterday, in fact. So there's the and again, had the price action above profiles appearing below price action, I should say, and that put another bullish kind of tone to this particular stock as we were spinning around above weekly profiles. So a lot of things were kind of in your favor there, but again, rolling the dice before earnings can work out, and it sometimes cannot. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're going to try to get Joey on for a short segment here because there's some things going on in China. I wanted to talk about some figures that I think he could expound on. You guys might want to be aware of that could kind of creep up into affecting the U.S. markets. Here's the S&Ps. Again, okay, he's going to grab Joey. Okay. Here's the 2147, 2149, 2150. There's some resistance up there. I was trying to bank against some of the 2134s, 2138s yesterday on the short side. Didn't work out. That's okay. We can come in and use inflection points and balanced areas like we always do. Just keep turning the rents the same way. Down a little bit this morning, 2137. So what do you do with this now? I think we're going to talk about this with Joey when we get him on to discuss the S&Ps a little bit more. But let's hit gold really quick before we grab him. I think we've got Joey now. Hey, Joey, are you there?
Yeah, I'm here. Hey, John.
Hey, man. How are you today?
Good.
Good. Hey, can we talk about China for a little bit? I mean, you sent me an email or two, and
Yeah.
Yep. Let's hit it.
Well, yeah. I mean, this is one of I guess Bloomberg was listening to the show yesterday because they they just put on one of their lead stories today, which is the $25 trillion debt problem that China has, and so basically just highlighting everything that we talked about yesterday, which is that most of this housing boom and everything was fueled by consumer debt versus the last ones, which weren't as fueled by consumer debt because it was more bigger down payments and everything. And now this one is very much like the U.S. one, where it's fueled by just really bad lending practices by the banks.
Well, how much of a cold could could the U.S. markets get concerned about that and that affecting the general economy of China and how that would also affect some things? Yeah.
Yes, I mean, I suggest everybody kind of read that article, but it's a little bit too early to get concerned about it because, but I think down the line it becomes a bigger and bigger problem.
Yeah, and that could be one of those things that nobody's expecting, and then it just turns into a, not a long-term capital type event, but some worries.
It would be 100 times bigger.
All right.
It would be 100 long-term capitals.
Right.
Coming
what
at you at the same time.
What percent of GDP is that 25 trillion right now in China? Do you know?
It's actually it says on there. I forget what the exact number is, but it does have it on there on the.
Is it a double?
Yeah, something big.
That's nice.
Yeah.
That's nice.
Yeah.
Okay, so
and
yeah,
it would definitely affect global markets if something were to happen there, but I don't think that's immediate. In nature, I think you'll get enough warning signs when they start to draw back the stimulus measures and stuff like that.
So in a sense, we've enabled the thinking that when countries get into that situation, they can print their way out of it, and everything's going to be okay.
Oh yeah, this is the whole world is basically using the American playbook now.
Yeah,
I mean, Japan, Europe, every country is basically using that playbook, and so printing money is just a part of society now. It seems it doesn't seem like it's wrong anymore.
Right.
If everybody's committing a crime, then it's no longer a crime.
Exactly. Yeah, and that's kind of in different areas like banking too. So
Exactly.
So you can't do anything wrong these days, folks. It's the frontier. It's like the Wild Wild West again. So do you think that the gold bugs and the fear factor that is usually in gold in situations like this that are happening they're just not even there anymore, right? Or I know there's going to be a breaking point, but
yeah, I mean, gold is stuck right in the middle of potential inflation coming our way again from the U.S. and then still elsewhere having deflationary pressures like China. So it's kind of stuck right in the middle, and that's why we're kind of consolidating around here, I guess. So unless the U.S. starts to see easing inflation pressures, and then Grandma Yellen basically says that we're never going to raise rates again, then gold will start to take off again.
Musical chairs.
Until that day, we're just kind of playing a bit of tug of war right here.
So that's interesting. Sometimes you and I always talk about sometimes all the time you shouldn't force a trade, and sometimes there's just nothing there as far as risk reward and things like that. So gold, obviously, after talking about that in that sense, probably not a good idea to force a trade on gold right now.
Absolutely, because we're right between the profiles right now.
Right.
We talked. You talked about the
1278.5 is a good number, probably.
Yeah, 1278.5, and then 12. I guess 50 or something like that.
52.
1250, 52. So that's gonna be the range for now, and just trade that range. You might as well. It's a good enough range to trade.
I think so.
You might as well do that. Yeah, don't try to break it out on your own.
Right. Where could mental capital be devoted to right now as you look across the globe? Like, where is probably the good, lower risk, high reward trade out there right now?
I think it's the VIX index.
Okay.
Going into year end, the VIX is still near an all-time low, and the markets are pretty tired. So.
Yeah, I agree. You know what else happened? We have a profile on the S&Ps that kind of appeared. It's an inside profile on an already relatively, average daily balanced area. So that like you just said, we're kind of right in the middle of that profile, and then it might not be a bad time to just play around on a long VIX component, which is what Steve Banger's been kind of talking about lately too. Can you hang out for another segment?
Yeah.
Okay, great. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We've got Joseph Jong on with us from Hong Kong today. Joey?
Yes, hi.
Hey, listen, can we go through some sectors? Are you able to speak about some of those?
Yeah, I can.
Or you want to stay on the commodity scene, or what do you?
Well, I think the commodities and the currencies are most interesting right now because the dollar is continuing to break out.
Got it.
Draghi basically said nothing today, and so we have dollar moving up across the board, and this is something that we've talked about, for over a week now. Just saying that nothing has happened in the dollar for so long that I'm so glad that something's finally happening there.
Yes. So we can start traveling again, is what you're saying.
Yeah.
All right. No, let's stay on commodities for a little bit then. We've hit gold and crude. I'm a little bit more kind of, let's get back down below 50 on crude. That's I hate to have gut feelings, but I just 51.22 is a big number. We're getting down below there. Are you thinking are some people still kind of short from that $40-50 range, or is this kind of reversed and over now? And do you think some people are still having to cover or not?
I'm sorry. You're talking about crude, right?
A lot of people are kind of banking on crude staying within $40 to $50, and we obviously got outside that range, and we're kind of either reversing back into that top of the profile 50, or we're just going to dive back into the main balanced area. Do you think crude has kind of run out of gas here, or do you think
I think it's really kind of close to the top, especially if the dollar is kind of reasserting itself. But crude has been very stubbornly just going higher, and every time it starts to break down and you think it's breaking down, you get somebody coming out and saying they're going to cut production or something, which we all know that they're not going to.
Right.
So we all know that, and but nevertheless they continue to tell us that they are, and so that's where I think we are close to the top there.
Okay. So on the VIX opportunity that you talked about before about buying some volatility, Steve Banger's been a big fan of that. He's been on the show a couple of times talking about some strategies for that particular type of scenario. When could we possibly expect an explosion in volatility and just kind of, we're starting to sell off right now as we speak. On a short-term basis, we're at 21.32. When is your time horizon on? Is just kind of buckle yourself in and put the trade on and just wait, or is it? When do you think
I think we're already overdue,
right.
And so I don't think we're that far away from that. We have like I said, we have not just the presidential elections, but we have Senate and congressional as well, and then we have the vote in Italy, which
Right.
who knows what happens there,
Right.
and with the change of regime there, maybe they come up with something new, right? We don't
Right.
know, but
Right.
It's the uncertainty that can happen, and then whatever uncertainty can spill over to other countries, and especially with if you're looking at where's the sterling right now? The sterling's at
Sterling's at
122.30.
Yep.
So at 122.30, it's rebounded from 118, and it's kind of put in a low. So, but either way, we're still 15-18% below after the Brexit. So other countries are kind of looking at that and really thinking about what to do, and you have all types of opposition to the Eurozone and their leadership. So there's a lot of things that can happen over the next couple of months, and hope. I don't know if China's going to pull back on some of the stimulus.
Mm-hmm.
They've basically had the pedal to the metal, and if they pull back on some, then that could affect things as well.
Right.
So there is a lot of things to consider that could derail this thing, and I think towards the end of the year you always get some kind of sell-off, although we should have seen it by now.
Right. So that's just kind of buckle yourself in and wait for the explosion. What do you think, like, of the currency, commodity volatility world? Where do you see maybe the best trade out there right now? I kind of like the yen myself, but
commodity, I think. I'm still, I guess the currencies, any dollar trade, strong dollar trade is good, and also the VIX. Those two are probably my favorite trades.
Okay.
Which of the dollar trades, it doesn't really matter right now, because I guess the euro should still have more downside. It's rebounding a bit here. After Draghi comments and stuff, but I don't think it's going to continue.
Right. So to talk about the euro for a second, right after that statement, you got some pretty decent resistance around 110.84, trying to block out the long side on this particular trade. As Joey said, we could just kind of lift up empathetically with some of the comments that came out, but really not interested in trying to catch a bid on this particular product ever. There's too many impending doom scenarios, like Joey said, with the Italy situation, the dollar rallying across the board. So again, I think the euro, anytime you get spikes like we're having intraday right now, you just got to hope that we get into some longer term inflection points to be able to whack it again.
So I think we just wait for short-term sell it at the unfair highs. Any resistance we'll look to sell.
Right. Well, I completely agree with that. Let's take a look at copper really quick. We got about 20 seconds, Joey. Got any thoughts on copper and where that might? Let's just pull it up really quick here. Just continuing to languish down here below 214, trading about 209.80 right now. Just think we're going to continue to sail south here.
I think so.
Okay.
There's not much support until about 205 level.
Okay.
206.
Well, listen, thanks for joining us today, man. It's good to speak to you again. Okay.
Take care. Okay.
Guys, we'll be right back. Thank you, Joey.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show, and thank you so much, Joey, for coming on today. And I was trying to get him to kind of commit to what are the best trades out there in his opinion, and that volatility trade, along with the strong dollar, came to the forefront of his thinking. I love this yen trade a lot. I mean, I hate it when I get this excited about a trade, but stops kind of generously below 103.50. And the more this thing spins around up here, and I hope it does consolidate up here, the more that powerful move is going to ultimately be on this product north. But again, it could go down, so make sure your stops are in just based on your appetite for risk. I like it. And to answer a question out of the den from Russ, I'll just state it. Weekly profile's been enforced for about 8 weeks, and we are back again to the unfair low. Could you please comment if you think that is significant? The thing I'll say about that, Russ, is this S&P market is, as we all know, sometimes relatively difficult to figure out. And I think the mental capital and the physical capital could possibly be devoted towards the volatility trade of this product more so than the directional trade. I'm bearish on this in nature. I love this thing getting below 2134 and at least retesting the bottom of this profile, or excuse me, not retesting, but gunning for the bottom of this profile at 2118.19. But to answer your question, it might better be served for this particular market, since we've had such a contraction, to just kind of throw the direction out the window and just focus on the volatility and try to pick out a strategy. I mean, the guys on Thinkorswim every day throw out some scenarios. Those guys are masters of. I don't like to complicate things, and that means that I've talked about this before. Sometimes you get sophisticated with option strategies and trying to unwind them and fix them and take legs off and all that. I mean, you kind of lose sight of the original concept sometimes. So having a kind of a volatility explosion strategy on simply possibly buying a strangle actually, you can kind of wait it out, buy a couple of months out, maybe December, things like that, and just wait for it to happen, and pay a little bit of insurance on the time decay and things like that. But again, that's my thoughts on the S&P trade right now. And again, I am biased towards the short side, and I'm not always biased towards the short side. It's just, I think, like Joey said, there's some impending, situations out there that the markets are not. I mean, Italy exiting possibly, market's not going to like that. I like how we broke down below last week and closed below this 2133, 34. I know we've done that before, but I like how we're making lower highs also on the S&Ps, and I think we could revisit some lower numbers. But I think the smarter trade right now, to not get shaken out of anything, is if that market goes down, guess what? That VIX is going to go explode, and if that's probably the easier way to attack this right now. Got about 10 seconds here. Again, gold is kind of, again, 1278.5, 1252. Those are the big numbers on gold right now if you're going to trade gold. Guys, you've been great. Joey, thanks again for coming on today, and great questions in the den. Hope you guys have a great day trading. Stay tuned for Larry. And I'm ending the show on the right segment today. All right. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.